Happy Friday, traders. It's 8:02 a.m. Chicago time on Friday, the 9th of June, 2017. Thanks for joining me again. Here's the end of the week. It's been an interesting one, not as volatile as I would have liked or expected, but here we are on the last day of the week after several key events. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The news, of course, yesterday centered around the former FBI Director Comey's testimony to Congress. I guess the summary of that is that it had something for everybody. Um, the biggest issue with the Comey testimony with relation to the market is that it's becoming a bigger and bigger issue, which means that it is consuming our politicians in Congress, which means that the GOP or the Conservative Party's pro-growth agenda that was pushed during the elections is not being advanced. Yesterday, the House of Representatives pushed out the Choice Act, which reduces some of the restrictions put on by Dodd-Frank. Dodd-Frank is a set of regulations that was introduced after the banking crisis to protect against future bubbles by separating banking and investment businesses. The the main key thing that took place after that is the UK election. Theresa May's Conservative Party was lagging through um, much of the result tally. I stayed up really late watching what was going on. A lot of the folks from the UK were up till 4 or 5 a.m. Following the results. The Conservative Party overtook the Labour Party at about, I think, 10 or 11 p.m. my time, Chicago time. But they came short of getting a majority government. They needed 326 out of 650 seats, and they only secured 318. So Prime Minister May, in order to push forward her agenda and her discussions with Brexit, about Brexit with the EU, needs to form a coalition government. So that's where we are. China's inflation came in strong. It rose by 1.5% year over year in May versus April's 1.3%. And then other than that, there were a bunch of different releases out of the UK and so on. I won't get into that. Um, as far as what we're looking for coming into the session, we have 10 o'clock. We get the U.S. wholesale inventories final for April, expecting negative 0.3%. This is a high tier number, but it is a final for 2 months ago, so it's not expected to have a huge effect. We get the Baker Hughes rig count at 1. That has not been having an effect since oil is not a key driver of the indices right now. And then as far as speakers, both speakers were ECB speakers and they have already finished speaking. So it's expected to be a fairly non-event Friday, fairly dull Friday. Yesterday's trading had some pretty good rotations, and I expect today to be a resting day for the markets. Let's take a look at what we expected versus what we got. Here we go. This is our primary hypothesis yesterday. We're looking for a drop. I was looking for a drop into the point of control around 24.2950. And then I was looking for the market to find a base and rotate up. The key rotation is looking for a test of the 24.37 area. I was looking for attack on the all-time high. Remember, I am quoting September 2017 prices. Yesterday's Trader Bite was built on September's pricing, roll-adjusted pricing. I'm no longer quoting June starting yesterday, and I'm continuing to use September instead of the June contract. So my prices are going to be different than yours. The June high is 24.39.75. The September high is 24.37.50, as you see here. So this is the main hypothesis built on the fact that we fell below the balance area that we've had here, and we put in an excess low. You can see that excess low, very, very beautiful textbook example of an excess low there. Uh, uh, Volume becoming anemic, and the market immediately responds to a test below the balance zone to bring it back into line. So the next most likely rotation in the auction, and this is why it's important to understand the auction, the next most likely rotation is higher. The higher probability play is higher, and that's why I was looking for this as the primary hypothesis. The secondary hypothesis is a continuation of what we were doing overnight, continue higher, and then fail to maintain prices into the MC point of control, roll over, and push down into the 24.2750 area, the value low of the prior day, which is not a really valid value low, but push through this low volume node and get down into the high volume node into the MC before finding balance and turning back up. What we actually got is a combination. So we did get an open auction. We got the rotation early, 33.75. Then it fails and it pushes through with an impulsive move down. So this looks like Hypo 2 kicking in here, a push above the prior day's high, basically just exactly as expected. Here is Hypo 2, right? Push up above the prior day's high, and then have some weakness, and then have an impulsive move down. And that's basically what we got here. We had an impulsive move down, shown right here. Pull back to mid. We got some heat on the mid here. The mid was set around 30 and a quarter, and the market pushed up to 31 and a quarter. So 4 ticks of heat, not too bad. Looking for the continuation, so we're looking for the break below 24.2650. Note that 24.20. For those of you who attended the convergence event on Tuesday with IRT, we talked about the zones indicator. That's basically a zipper. I'm using it as a zipper indicator. This first low was the mid of the zippers I've often talked about for execution. And then we turn back up, and then we get the continuation trade as expected. Pushes to the low of the zipper, 1 ticks the zipper, and then back to mid. Here we get a mid setup again for a short. However, you have to be cautious with the second mid short because the continuation has already occurred. So now we're expecting a push back up, higher low, and then a corrective move. And that's basically the higher low did not show up, didn't materialize very clearly, but then we ended up with Hypo 1. So right here, we're back at the open, and we are on Hypo 1. And we push where? We push to the edge of a zipper from a couple days ago. Here, let me squish this. Double zipper up here. From Monday, we had a zipper right there. We had a zipper right here, and we've built this resistance zone. Generally, I don't use these over days. I use them intraday, but I like that I can plot these going forward into time. And we tested so we've moved from the consolidation on the low side to the consolidation on the upside, and we pulled back to the consolidation on the low side yesterday afternoon, and we finished right in the middle with a beautifully balanced profile. We have an extreme at the top, and then it goes up. We have your kurtosis in the middle, right in the center of the range, and we have a nice little taper here on the close. It's a heavy taper, but it's a taper nonetheless. And then the point of control is right in the middle of the range. There's the mid, the blue line right there, the mid of the range. The point of control is right against the mid, against VWAP. Market's completely imbalanced. And that brings us into, and then we closed right against this. So we closed at 29.75 or thereabouts, I think 24.30 actually. And so what this sets up for is a pretty choppy overnight. However, we did have the UK election as discussed. The UK election brought in The UK election brought in this gap. Okay, so we had a gap coming in right there. The markets test down and then they make a higher low. So there's your corrective, your failed low right there. And then it starts to shift up and essentially hangs out right up here. So without this lower end of the profile, we pretty much have a concentration of trading right in the 2430 to 2435, 2436 zone. So the market basically dropped and it's again hanging on and is balancing right against the upper part. So this is yesterday's profile. Look at where it is. Same area. Yesterday's extended hour profile or Globex profile is right against. We're right against it, against the one from the day before, and then the day before that we have another area that sets up a support shelf for us. So you can see that the the market is moving higher and higher and holding, coming back, snapping back to these higher prices and continuing to suck in as much energy as possible for a continuation higher. So coming into today, I'm going to step back a little bit and look at what we've done for a week. For the week, we have not gone back and tested that 24.15. I talked about it earlier in the week. It was my hypo 3 for 2 days in a row. We never went back to retest this area, so this area remains remains with a weak auction right here. This area that remains open between 24.22 and 24.15. And for the week, we spent the entire week basically just hanging out up here. So Monday started out higher, then we get a lower high, lower low on Tuesday, lower high, lower low on Wednesday, and then yesterday we test all the way back up to Monday's high, and we have basically a balanced week, a relatively tight range for the week. So, of course, today's remains to be seen. But if you look over the last few weeks at the ranges, this is this week's range. Here's last week's range, right, which was an extension or wider range the week before that. The week before that was great. We had that drop on the 17th, and then we're back into the squished ranges right back here. So this week's range has been pretty tight. So by any measure, for anybody who's looking at averages and stuff, it's not going to show up as well. But if you look at a weekly profile, it's really clear that we are just clawing at that high. We're just not able to move away from it. As far as what we're expecting today, what I'm expecting today, the market's having tested lower. I'm expecting again an open auction. I'm expecting the market to drop again and then build a base and then finally test at 24.3750. If you're on a June contract, that will bring you to 24.40 and then ultimately finish somewhere where we started here. So this is hypo 1, okay? And let me bring this profile forward. Let's squish this a little bit. We bring this profile forward. You can see that profile is really robust, right? So it's got a higher distribution than a low volume node, and it's got a very fat lower distribution. So let me shift this to represent where we are. Here we go. Okay. So overall, the expectation, or expected to open right there, the expectation is that the market's likely to hold on to these prices and push higher. We've been just sitting and winding up and winding up and winding up for a turn higher. So if it doesn't do that, open auction, test higher, take out the overnight high. We have that excess high, start moving towards that point of control, the MC point of control, lower at 24.30 and a quarter, overtake it, and then end up again testing the other side of the range and being stuck in the middle. Okay, so stuck in the middle with you. So that's hypo 2. I'm not expecting too much, although the week has wound up so tight and the British election is behind us, so there's no cause for waiting. But we're going into the weekend. Hypo 3 is the rally hypo. looking for an open auction test down and then to start shifting up and to start targeting 24.45 and push up into the 24.45 area. That's the drive. So what we're looking for on that is a drive, a higher time frame participant to kick in and drive the market right away. I want to remind you that it's like Friday. It's like Friday. Hit the like button today on your YouTube stream in front of you. If you do not see a like button because you're viewing this on a website or something, just click on the YouTube button down at the bottom right. That'll take you to the YouTube live stream and just hit like. I'd appreciate that. So help me out by doing that. Again, this is another week that comes to a conclusion. I hope you've gained something new this week, especially with the AMA and the convergence event. And we'll just continue talking. Take care, everyone. Again, don't forget to hit the like button. Have a great weekend. Take care.